So, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending? How do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. I'm Merrill Chandler, and welcome to the Are You Effable podcast. Welcome back, everybody. Merrill Chandler here, your host of Are You Effable. Trying out a new graphic to remind you where you are and what you're watching, what you're listening to. But guys, this episode is one of my most hardcore. I make a stand for borrowers who do not yet know the rules of this game, and so. When we come back from the intro, we're going to drop into a Facebook Live where I take on credit card stacking by one of the most notorious credit card stackers out there, Seed Capital. I call it like it is. I review their entire website. You're going to be able to see, listen to, hear, and read on the blog at fundinghackers.com. You're going to be able to review the misrepresentations, the misdirections, some outright lies that are being promoted in the marketplace to borrowers because in good faith you are looking for business funding. And then I give them all an option. I say either they know the rules of the game and they are straight up lying out their ass to you to take advantage of you and to profiteer off of your ignorance, or they don't know the rules of the game and they're just too dumb, too stupid, or too ignorant to want to engage the truth and to protect your best interests. So without further ado, take a look at this episode. You do not want to miss it. It is hardcore, and I even challenged the CEO of Seed Capital to come onto my podcast and defend their business practices. So enjoy, guys. Welcome to one of the long-awaited episode of Liars, Cheaters, and Thieves, where we do a complete unmasking of Seed Capital as a, quote, a startup capital funder, as all of it. We're going to go through their language on their website. We're going to take a look at what they're saying, what they're promoting, what the truth is behind their words, and at least give them an opportunity to answer back and answer one or two questions. Do you really not know the rules of this game and you're just ignorant? Or do you really know the rules of this game and you're just taking advantage of every single borrower out there, individual who's looking to fund their business but doesn't know the rules of the game, and you are totally forgetting your fiduciary responsibility to take care of your customers. And as a result, you're profiteering by the destruction of their credit profiles, their borrower profiles. So before we get further into this, let's take a look and see what they're all about, right? So first things first, here's a mocked up version of their page. Go there and you'll see for yourself. About, funding program, pre-qualified, get pre-qualified clients, FAQs, and contacts. They're all here in a one long line. We're just going to go through them together. All right. So first of all, they have a marquee that rotates. Every one of them say something similar to the fact that we've fueled growth for over 20,000 startups, right? Sounds fair enough as a description. And remember, some people may know how to use their personal credit profiles to succeed. I'm going to tell you, we have literally dozens, if not hundreds, of clients who come to us after going to Seed Capital, who have butchered their personal credit profile, killed their funding golden goose, thrown a wrench in the business funding machine, any number of metaphors, and left these clients devastated. High debt loads and horrible unfundable credit profiles and scores, and and literally left them to rot after having after having worked with them. So this looks really nice. We're going to put our, I'm an entrepreneur hat. I'm a small business owner hat. I'm a real estate investor hat. We feel growth. All right, I want to keep reading. This is awesome, right? And then he says, they've raised over $2 billion since 2008. Okay, raised. Now, remember, the language is intentional. They didn't raise this money. Raised means you go out to usually equity partners, equity investors, and venture capital groups, and you raise money as an agent, like the corporations, the corporate officers go out and talk to investors to invest in your company. You're raising capital, not getting into debt. Much of it is equity, but even if they're raising capital in debt instruments, it's not credit card debt from commercial lenders. So this is a complete misdirection. This is a horrible representation of what's going on here, and I'm just going to put some exclamation points here because this is straight BS. All right, they don't raise money by any definition of the term raised money in financial circles. They are actually applying on your behalf and getting personal credit cards, which we'll cover in a moment. So this is a lie. This is a lie. Of liars, cheaters, and thieves, that is a lie, but sounds really good, right? If they've gotten $2 billion, maybe they can get me some money too. Well, they're not getting you money. They're actually applying on behalf of you to get credit cards. So let's continue. Funding a startup is one of the most difficult challenges any entrepreneur will face. Having personally founded over a dozen startups, the seed capital team knows how difficult it is to secure funding, right? So once again, they're using the term not get credit cards. They're saying they're using true investment banking, investor relations language. Then Seeds Capital's mission is through innovative funding. Now, it's innovative, all right, because it's not even remotely close to raising capital. Now, their owners may have parts of their organization or otherwise that actually do reach out and get investments. But the vast majority of them, we'll talk more in a minute about this, but the vast majority of their customers are individuals who are at real estate investment conferences, internet marketing conferences, and they're watching big stages, and somebody says, hey, we've got a funding mechanism so you can pay for this class. So go to the back of the room, make a simple application, and we can get you money for this class. When they go to the back of the room, they fill out, and what you're doing is you're filling out a master application that Seed Capital's reps will use to qualify you for personal credit cards, not investment dollars, right? So the first thing they want you to do when you're at one of these conferences, one of these seminars, is go to the back of the room and get more credit cards so you can buy the program that's being presented to you. Now, I have nothing against the pros and cons of whatever program. Buyer always beware, right? Whatever program you're looking to invest in, I'm just talking about how you're funding that investment, whether you're a real estate investor, whether you're looking for capital for your business, whatever you're looking for. I'm talking about Seed Capital is straight up lying to you and misdirecting what is actually happening when they help you get funding. All right. So here we are. Innovative funding, meaning, hey, let's just go butcher your personal credit profile and get you in so much personal credit card debt that you can then use for your business. They talk about that in a moment. There's credit building techniques. I've never had one of the clients who've come to me after being with Seed Capital, never had a single client who said, oh yeah, they have credit building techniques. Not saying that they don't, but I'm saying that the credit building techniques are, if all of this stays in line, they are not going to have the your protecting your personal profile in mind, right? And this episode is also calling out to the CEO of Seed Capital to come onto my podcast. Come and sit down with me and let's talk shop. Let's actually get it down and dirty. So I will be sending a formal request to him. I'm just calling it out in person that we have this conversation in a podcast form so that we can interview each other about the truth of what we're doing. Now, notice what it says here. Credit building techniques by providing cash credit lines. All right. Now, the formal definition of a credit line is a line of credit that it immediately begins to charge interest the second you use it. It's like a credit card, except it has generally lower interest rates, and the interest starts the second you use it. Generally speaking, that is a credit line. Credit cards can have zero interest. Credit lines never have zero interest, guys. There is not a credit line out there who has zero interest, but credit cards do have promotional periods where 12 to 24 months, there's zero interest, right? So when they send messages that you can get zero interest loans from lenders, they're talking about zero interest credit cards that are on your personal. But notice how sexy the language is. Cash credit lines. Yeah, that sounds compelling, right? They're moving me through their marketing. Like, I would like some cash credit lines. I'd like to be able to write a check and do a deal, except that's not what happens. All right. Then just read the language. It's compelling if it were true, right? About us. Our founders have started or been angel investors in ventures. So once again, they're leveraging the history. I don't doubt the history of their partners or the founders. I'm saying that they're using language about getting capital in order to bait and switch to turn this $2 billion in funding into credit card debt, right? Personal credit card debt that, when charged up, anything over 7%, as you're learning in our podcast, as you've seen before, anything over 7% on the personal profile is actually a negative indicator on FICO's measurement metrics. Okay. Then notice it says, and we also offer valuable consulting experience. Now, again, I don't know about their valuable consulting experience. What I do know is there's not one single client that I have run into that coming from Seed Capital for me to help them climb out of the hole that they're in. Not one of them had any kind of valuable consulting experience, and the consulting experience sounds like they would coach you on the protocols for use of personal credit profiles. Not so. That is not happening for literally the dozens or hundreds of clients that I have. And I say dozens or hundreds because I don't know. We have gobs and gobs and gobs of clients that have had the credit card stacking experience. Now, I use credit card stacking in this way because credit card stacking is the formal term that is used to, when you go out and you get a bunch of credit cards, usually applied for in one day, so that you can fly under the radar. Now, before this episode is over of Liars, Cheaters, and Thieves, we're going to talk about the 524 rule, right? And where all of this is going away. That FICO's Falcon for fraud detection, the early warning systems, every single database and predictive analytics in the market are cracking down on this very behavior. So I'm hoping that we get to say bye-bye to credit card stacking and every person and organization who does it. So let's look at the Seed Capital program. Notice fear trigger. Hey, to realize their dreams, entrepreneurs give away precious equity to finance their companies. Well, that's true if that's true. In fact, unfortunately, selling even a small percentage of shares to an investor can change the power structure. Not true. If you have over 70% interest, there is no voting block that it can even block you. But we won't even go into corporate politics and shareholder proxy meetings, etc. Notice that can cause you to lose control of your vision. See the emotional language that's being used. You don't want to lose your vision. So you don't have to give up ownership for startup funding. Notice startup funding. Put on a credit card your startup. That's not what they're telling you here at the beginning, but they're weaving this beautiful language. Now, Seed's vast experience and knowledge with startup funding will allow you to keep all your equity and still get the capital to grow your business right now. What they don't tell you is you're getting personal credit that you can then use for anything. It doesn't even have to be for your business. You're getting a credit card, like going out to Wells Fargo and getting a $5,000 credit card. That's all they're doing on your behalf. They're just going out and getting credit cards, right? So as we go through this, let me make sure I'm completely out of the way. So the next thing is that let's look at, again, fear mongering. You already have a business? Did you know that 80% of businesses fail due to undercapitalization? Will your business be positioned to respond to constantly changing market dynamics? Seed Capital will help you in the development of funding options. There's no funding options. They're going to get credit cards for you that report to your personal credit, and you can have too many of them, too many credit cards, and we'll talk about how they shut you down. Lenders will shut you down. You will use that credit too fast, lenders will shut you down, or they'll make the 0% interest go away immediately, or they are going to, or they're not even going to approve you at all because of the 524 rule. Again, covered in a moment. Now, the credit lines or business loans, it doesn't say business lines of credit here, guys, because that would be pushing the misinformation too far. The credit lines or business loans are underwritten and qualified for wholly on the borrower's credit rating. Doesn't even say owner, the borrower's credit rating and stated business information. Most of the time, they don't even, if they open up a credit card, most of it is 100% on your personal profile. If they go outside of their narrow focus, then they may do something on a sole proprietor, which in every legal version of corporations and legal entities is an alter ego for the person. They're just messing with the language. Let's take a look here. So phase one is to review the client's personal credit report and see if you can qualify for the $50,000 guarantee. Well, that sounds awesome, but they're looking at your personal credit report. Why? Because they're going to be getting you personal credit cards. Now, notice what it says here in phase two. Phase two features applications for unsecured revolving lines of credit that can be used for any purpose the business owner deems necessary. It doesn't have to be the business owner. You don't have to own a business to go to Seed Capital and get startup capital. You don't have, they're just going to hit your personal credit profile and get you personal credit cards. Feature applications for unsecured revolving lines of credit. It doesn't say that this is true. They are unsecured because they're credit cards. They are revolving because they're credit cards. They are not lines of credit because they're credit cards. And it doesn't say business lines of credit. I just got $75,000 from Wells Fargo in the last 30 days, right? 50 of it was on a business line of credit, okay? Doesn't report to my personal, only reports to business. The other 25 was a business credit card, not a credit line. I got a credit line. There's a business credit card. This is neither one of those. Listen to the language. It's an unsecured revolving line of credit that can be used for any purpose because it's not in the business. It doesn't have the business name on the credit card, doesn't have anything. And remember, I'm telling you my experience of the vast majority, well, every single, not the vast majority, I'm telling you my experience of every single client that's come to me from Seed Capital. They may have that, again, I'm happy to give a disclaimer. I would love for it to be 99% of their business, but they may have a small percentage of their business where they help with business credit lines. But it takes more time. It's a devoted process to get true business lines of credit. So what do they know? They know that they're helping all of these real estate investment stages, all of these seminar companies have them at the back of the room, or someone like them, because we're going to go through, Seed Capital is not alone. We're going to be doing Liars, Cheaters, Thieve episodes on numerous of these credit card stackers, right? Even ones that purport to do business. And I got case study after case study to be able to do this. For Seed Capital, I didn't need case study. It says it right here on the language of their website. So remember, guys, that unsecured revolving credit cards that report to your business, that report to your personal credit profile, can be used for any purpose the business owner deems necessary. Really expansive language, sounds really sexy. I'm just telling you, it's not true. Excuse me, not true at all. Okay. Then let's go down here. So let's get pre-qualified in 60 seconds, right? Do you qualify for the 50K guarantee? We guarantee at least 50,000 in cash credit lines, or a program is free. It's right. It provides, the program is not based on income. It provides unsecured credit for startups are okay. It's not based on income because it's how much it's a stated income. It's a credit card application. You put an amount in the annual income, and it goes through automatic underwriting, and they know the parameters. Now, I don't know this. I want you, if you're listening, if you're a Seed Capital client, you need to ask them, what amount of income are you putting on my application? Because whether the practice is still the same or not, give them the benefit of the doubt. They fill out the applications and submit them for you. They put in, you give them a power of attorney to fill out the application for you. Do you know what amount of income that they're putting in that stated income application? Are they lying on your behalf? And possibly getting you in trouble for fraudulent applications. I know that Falcon, we have other episodes in Funding Hackers, Insider Secrets, our podcast, where we talk about how every single that FICO Falcon and the other databases out there, the fraud detection units out there, are looking for variations in how much your income is on an application. They're checking the application last year with the application this year to see what variation there is in income. Are they lying on your behalf? You need to ask these questions, because if you're not filling out the application and submitting, somebody else is doing so, and it's actually against the card holder agreement for someone to fill out an application on your behalf. Even with a power of attorney, when you hit submit, you're affirming every one of those data points are true. So just cover your asses, guys, because it's not good. Then notice, find out instantly how much capital you can access. They know the personal credit card space, but the problem is your personal credit card space is the goose that lays the golden egg. You're killing the very thing that is going to provide you funding for the rest of your life, right? So let's go down to frequently asked questions. Can my business be organized as any type of business entity, right? Here's where they either don't know, which makes them idiots and irresponsible in this space, or they do know and they're just lying through their friggin' teeth, okay? You can use a sole proprietorship, LLC, S Corp, or C Corp. Now, let's get our terms straight. Sole proprietorship and LLC are the only real words in here when it comes to the definition of an entity. They missed one. It's called a stock corporation, because S Corp or C Corp are federal tax designations, not state and not types of entity within a state. There's no such thing as an S Corp in a state. You have an LLC or a stock corporation, an Inc., and then you file federal tax papers to be taxed as an S Corp or a C Corp. So either they don't know or they're blowing smoke up your hindquarters, because there's no such thing as an S Corp. God damn it, it just makes me angry. Okay? Now, just so you know, a sole proprietorship, this sole proprietorship, it's telling you sole proprietorships are alter egos. So I am unaware, in my vast 25 years of experience, I am unaware of anybody filing under a sole proprietorship that got true business credit, because on the application, they ask for your social security number, not an EIN. And if they do ask for an EIN, it still goes on your personal credit. The account is listed on your name, because a sole proprietorship just means I'm Merrill Chandler doing business as XYZ company, right? Merrill's Marauders. This is transparent. There is no corporate. If you got sued as a sole proprietor, it goes straight to you. There's no corporate bail. There's no asset protection. There's nothing. There is for an LLC, but they're not going to set up an LLC for you. And if you have, notice you can use a sole proprietor LLC or S corp. You can use it, right? But however, banks prefer to lend to individuals that have formed these LLCs or corporations. Notice, they're telling you they want to lend to you, and it's without telling you that it's going to be a personal credit debt, not a business credit debt that ends up on your personal. Now, remember, I'm not talking about my business lines of credit that I just got, the $50,000 in business line of credit and $25,000 for Wells Fargo in a business credit card. If I don't pay them, they are going to end up as collections and debts on my personal profile. It will hit my personal profile, but it does not, because I am the personal guarantor. But it does not report as a credit account in my revolving accounts portfolio, because I know that I want to build true business credit and not kill the profile by having too much available credit on my personal side or too many revolving accounts. There is a FICO indicator. There's a negative indicator that says too many accounts, right? And there's also too many accounts in X period of time. So in too short of time, I believe is the language. So forming a business, now this is all just straight BS. Forming a business entity shows the bank that you're serious about your new venture, and you take the legal steps to legally protect it. They don't care. That this is just gobbledygook. They're putting it on your personal profile. And even if you have an LLC, guys, even if you have an LLC, they're going to be putting it on your personal profile. Okay. Now, then let's go to, misdirection. What are the minimum requirements for a business to become a client? There are no annual sales minimums to become a client, and the seed capital program is not income dependent. Are you seeing a pattern here? They're saying on a stated income, a personal credit card application, you never have to have sales in a business. But they're not telling, they're implying that because they're trying to sell you as a startup company, I can get you business funding. But what they're saying is, I can get you personal credit cards that report to and ruin your personal credit profile, and then you can use that money for your business. If that said that at the top of the page, we would not be having this conversation. We would not be having this conversation. I can get you personal credit cards that you can then you can liquidate those limits, and then when you liquidate those limits, you can use that money for whatever you want. What they're not telling you is when you liquidate those limits, your utilization, your balance to limit ratio goes through the roof. When it goes through the roof, your credit score plummets, your fundability goes to zero. And you're counting on that 12 to 24 month for a zero interest, and that zero interest has stipulations. You get to keep zero interest if you don't charge too much too fast. But the whole point of getting these credit cards, guys, is so you can charge them up to buy the education programs at the back of the room or go fund different aspects of your business. But every time you take a balance above 7%, don't listen to the people who say, yeah, as long as you don't charge 30%, you're fine. It's varying shades of charcoal gray to black after 7%, guys. I'm just telling you. You guys have the experience. You've seen what happens every time you use it. And then we won't even get into the different credit cards that are out there. They may say, oh yeah, let's get you a Capital One Spark card. Whoa, yeah, that says business on the marketing and business on the credit card, but it also reports to your personal. And when it reports to your personal, every time you use it, it affects your personal profile, and that personal profile then crushes the soul of your fundability. All right, so let's look over here now. Now this one, huge misdirection. So funny. The CEO's credit score is by far the most important aspect, but at least one of the partners in the business should have a credit score of 680 or higher, right? Banks believe if you have been vigilant in achieving a high personal score, it's likely you apply the same financial responsibility to your business. It doesn't say apply the same financial responsibility to your business credit accounts. It says that if you're responsible on the personal. Well, here's the thing. They're relying on your ignorance of how the funding game is played, especially the business funding game. Here's the thing. Did you know that most banks, business lenders out there require a minimum of 70 to 90% ownership of an entity to get only one person to backstop the business credit line or credit card? Has to own. Some say 51%. There are some 51% or more. You can have one owner on this. But just so you know, each one of these, when you discuss partners, if those partners, we just talked to Regions Bank. We are talking to an Atlanta office, and they said that any owner above 25% must be on the business credit application, whether it's a credit card or a credit line. That blows it out of the water, because now 2 people or 3 people are required to get onto to get this credit card. They don't do that. This is all freaking malarkey. BS alert, BS alert, BS alert, BS alert. All right? Oh, there's even another one. So, is there any, okay, pay attention, everybody. Is there any risk or negative impact on me or my company? Now, watch how they dodge this frickin' bullet. I want the CEO of Seed Capital to answer me this complete bullshit. The owner of the business will have inquiries. So negative risk, negative impact. The business owner will have inquiries to their personal credit report. That's true. And those can have a negative impact on the personal credit score for up to 6 months. That's complete BS. That is a lie, a lie, a lie. FICO calculates it against your score for a minimum for 12 months, and it counts against underwriting for lenders' underwriting software for 24 months. It counts against FICO scoring. You'll rebound after 12 months, but underwriters are going to count every one you've done. For those, my clients, my students, all you guys who do this with me, you know there's a 24-month look back period. Their lending software measures the impact of your credit for 24 months. So that is a complete lie. Yes, here we go. Oops. Lie. Okay, well, all right, now it's just getting ridiculous. Okay, lie. Now here's what they say. If you carry high balances on credit lines that report to your personal credit file, your scores will be negatively affected. Duh. But they think that putting this at the end of all of their frequently asked questions, if they think that that's enough, because this is true, but it's it is at cross purposes with what they're saying, what you can do with those credit cards. They're selling you, charge them up and use the cash, charge them up and use the cash, charge them up and use the cash, charge them up and use the cash. Then they say, but if you carry high balances, now they even still say credit lines. They don't say credit cards. All those credit lines, guys, all those credit lines, they're credit cards. If you carry high balances that report to your personal credit profile, your scores will be negatively affected. They're thinking they can dodge bad juju bullets by putting that statement. While true, it's completely at cross purposes with what they're marketing. They want you to come to them, pay them $2,500, $3,500 to go out and burden your personal credit profile with personal credit cards. I have clients who've come to me with 27 of these puppies on them. Burden your personal profile with credit cards. That's like throwing a millstone around the neck of your goose that lays the golden eggs, right? Your personal profile is the goose, guys. It's the goose that lays the golden eggs. Let me make sure I don't have any other things down here. Good. Yeah. If this hasn't been brutal enough, then I don't know what is. Here's what we got to watch for, guys. Credit card stacking by any company is burdening your personal credit profile. There are numerous FICO negative indicators that you get hammered for by when you do. One, you're going to lose or significantly lower your credit card if you charge it up. Most people get the credit card and then they charge it up, right? Immediately within 30 days. That is not how you're supposed to do it. Secondly, if you carry long balances at the beginning of a new relationship with that lender, they're going to limit or they're going to close your card, or they're going to limit or they're going to lower your limits. I've had clients come to me and say, every single time I make a payment, they lower my limit. Some have had a $15,000 balance, and they lowered the credit card limit to $5,000. So it's literally 200% more than the limit. Do you realize FICO crushes your fundability, crushes your FICO score calculations when you're upside down, when your balance is higher than your limit? And we even asked them, when I was back at FICO World, I said, look, here's the do you guys actually account for lenders lowering a limit? And they said, no, we want to know, because there is a bona fide lender reason for lowering that limit. Increased risk, susceptibility to fraud or default. They're going to lower that limit. And if you're upside down, if you've got a balance that's more than your limit, then FICO is once again crushing your personal profile. So, and let me tell you about the 524 rule. I promised I'd tell you about the 524 rule. FICO Falcon's fraud detection system is a collection of 9,000 banks that feed borrower data to this central clearinghouse. It's not the credit bureaus, because it's application data. Okay, credit bureaus collect creditor payments and creditor account information. This is so it doesn't. So FICO Falcon and the application software collection process is not subject to the Fair Credit Reporting Act, because they're just sharing it among themselves. You've given them information on an application, and they collect it. This the 524 rule says that any participating bank will be notified and will deny any application where there has been 5 credit card approvals within the last 24 months. And Seed Capital and every other credit card stacker out there want to get a minimum of 5. They want 5 or 10 or 15 of these so they can hit, because you guys pay them a percentage of their success. So let's cover what it's costing you. We've talked about, I beat up the horse that says no horses were harmed in the production of this Facebook Live. The dead horse is that you ruin your personal profile and you kill your fundability. But when if they want to get as many credit cards approved, because they may, depending on your program, they collect 5% or 10% of how much you were approved. So if you get $100,000, you're going to be paying them $5,000 to $10,000 to get that 100, and that 100, when used, ruins your credit, ruins your funding possibilities, ruins everything about your funding future until you get all those things down to zero. Even if you pay them all off, even if you have a windfall and you pay off all those credit cards, the 24-month look-back period has this huge spike in the 24-month look-back period that FICO monitors for the next 24 months. But more details, go to my podcast. This month, we're publishing the Are You Effable podcast. It'll be out there. For a deeper dive on all this, go find our podcast, Are You Effable. Should be published here in the next couple of weeks. Guys, you can also go to fundinghackers.com and check out our boot camp, right? Just check out the boot camp. That boot camp is 2 days of reveal all the things that are going on. We're talking about one little tiny thing about your fundability. So fundinghackers.com, click on the boot camp button and find out what we're doing, and come and join us. Become a funding hacker, because the only question that matters is, are you effable, right? Are you fundable? And this is a perfect example of how to, if whatever level of fundability you were, you just lost it by working with an outfit like Seed Capital or any of the other credit card stackers. 524 rule. FICO's tracking all of those credit cards for 24 months. You're going to, if you violate the terms and conditions of that 0%, you're going to either start charging interest. They're going to start charging you interest, or they're going to lower your limits, or lower your limits below the balance levels. It is a lose, and yet a win for Seed Capital, because they're going to charge you that 10%. Then the final loss is that once they've charged that 5 to 10% to you, and I'm being generous, I think it's 10, but I'm being generous because I don't know today's practices. 5 to 10% is being charged to get that 100,000 in credit line. So you're out 10 grand right there. You got balances churning already. Then they send you to a third party if you want access to that capital. If you actually want to do what they say, then they send you to what's called a liquidator. They liquidate your credit card limits by charging them up. Now, this is it's against every merchant account policy in the universe for you to go not buy something, but under the guise of a service, these guys will swipe your cards and charge up all of those cards to predetermined limits. They're going to ask you 50%, 70%, 100%. If it's above 7%, you're screwed. But they're going to say, how much do you want? 50, 75? And people are like, oh yeah, 30. I want to be conservative, right? So your score only drops 30 or 50 points instead of 100. And it's brand new cards, and then all the other penalties will come into play. But these liquidators will also charge a minimum of 5 to 10% to access all the capital. Now, I'm going to bet you right now, I do not know this. I would love when I'm sitting here in a podcast with the CEO of Seed Capital, I would love nothing more than for him to say, you know what? We are not related to the liquidators. We don't make a dime off of the money they charge. That would be a tiny, tiny, minuscule win. I believe it's just another organization that's related to Seed Capital or any of the other credit card stackers. And every time you charge up those balances and they swipe those cards against every merchanting account game out there, because you're swiping for cash. You're not actually buying a product or a service, no matter what their paperwork says, right? I have a merchant account. There's rules behind this merchanting process. Then they swipe all your cards to the predetermined balances, and they charge you 5 to 10%. Again, you might be into this 10 to 20% of that 100 grand, and it just went out the door, and you're carrying balances, and now you got, and if you, let's say you went up to 50%, now At 50% of the balances, you only have 50 grand, and you only have 40 of it to use because you paid 10% to each of those outfits to get it. Now, 40 grand may be beneficial, but I'm just telling you, I'm not saying don't do any of this. I'm saying know what the hell you're doing if you do choose to do it. Because too many times, let me tell you about Chris and Nicole. So Chris and Nicole come to me just in a monster pickle, because they went to a real estate seminar. They went and did credit card stacking with seed capital at the back of the room. They picked up a bunch of personal credit cards. They purchased the program, and then they liquidated their balances. They took those balances and then went and put a hard money did a hard money loan to take down a property that they wanted to ultimately get long-term financing for, but they used some of the money to fix it up so they could rent it and become a rental. And then what happened was, the second they charged all those up, they took down the property with the hard money lender, and their credit score plummeted into literally the low 600s, completely unfundable. They fixed the property. They're doing everything right. They're so proud of themselves for doing everything that their real estate coaches were teaching them, except when it came to take out do the long-term financing, take out a Fannie mortgage, they couldn't qualify because their utilizations were so high, and they had to keep paying and paying and paying high interest to the hard money lender, because they couldn't qualify for the takeout mortgage that would make all this work for them, because they didn't know the rules of the game. So I'm telling you guys, don't do it, because so many times people come to me after the fact saying, oh, my deal didn't happen fast enough. It would have been worth it if the deal happened fast enough. Okay? So again, I say, if you want more information, go to look up the podcast, Are You Effable? If you go to fundinghackers.com, click on the boot camp, find out more information, watch the free presentation there to walk you through all of this stuff. I'm telling you, there are resources that you can do free of charge. Just find out what the rules of the game are, and learn how to play and become a professional borrower instead of a rookie amateur, someone who who doesn't know the rules. And then these MFs are going to take advantage of you because you don't know the rules. So I say, as I say with every single liar, cheater, and thief episode, shame on you, seed capital, for either not knowing the rules yourself and being too stupid to take care of your clients, or for lying through your teeth to get their money and ruin intentionally their credit profiles. Friggin' shame on you. This is Merrill Chandler, your chief funding hacker. And thanks for listening, guys. Thanks for listening. Hey, guys. Thank you for listening to Are You Effable? Please leave comments, because I would love to read about your aha moments from this episode. And be sure to visit fundinghackers.com to view the blog post, get important links, join our community, and much, much more. And you gotta tell your friends about this podcast. We want them to become effable too.